My name is Rich Kotite. I'm an early stage VC with Accel. Sorry, the volume doesn't seem to be working.
Generation AI. My name is Philippe Botteri, and I am a partner at Accel, the global venture capital firm. I am here this morning with my colleague Richard. You are probably expecting my physical twin to be on stage, but he is running late and asked me to take over. Time for the Generation AI to take control. Before diving in, let me ask you a question. How many of you think that generative AI will create the next wave of growth for the SaaS ecosystem? Good. I think you're right. I see that my physical twin just arrived. I will let him take over.
Hi everyone. I wasn't gonna let my digital avatar steal all the thunder. So very happy to be here today. I hope you enjoy this piece of technology for Synthesia. And this is just the beginning. So I'm here today. I'm very excited to be here with my colleague Rich to unveil the 2023 Accel Euroscape, which is basically a state of the cloud ecosystem in the US and Europe, and of course we'll unveil the top 100 cloud company that, what we think are the top 100 cloud companies out of the region. But before we get there, let's talk a bit about the state of the ecosystem. I mean, last year when we were on stage, we're not in a great spot. Unfortunately, there was a full reset going on. I think what we are observing is that the ecosystem has been very resilient. And if we look at, for example, the 2000 crisis, it took 14 years for the NASDAQ to go back to 80% of its peak value. And after 2021, it only took 18 months to get to the same milestone. So it really shows how technology has been pervasive and how strong the ecosystem has been and how fast it's been able to rebound. So now let's look at what we call the tech titans. So the companies that are north of $1 trillion in market cap. They are, as you can see on the slide, there's 6 of them in the world. 5 of these 6 are actually tech companies, and we have a new one this year with NVIDIA, who went from like 300 million to 1.1 trillion of market cap, which shows how people are anticipating about the impact of generative AI. And now if we zoom a bit more at the cloud giants, so it's like one order of magnitude lower, so companies that are north of 100 billion in market cap, you see that we still have 8 companies in that bucket. These 8 companies have grown their market cap on average 40% in the last year, added basically $1 trillion. So it really shows that the cloud and SaaS ecosystem has been really able to rebound. But there is one thing that you notice on this slide is there is for Microsoft, the bar is hashed because it just become so big. And right now, we used to say, cloud is eating software, and it looks like now Microsoft is eating cloud. And if you look at the gap between Microsoft and then the number 2 cloud company in terms of market cap, I mean, that gap is just getting bigger and bigger. And the reason for that is because Microsoft has been dominating the key areas of software. I mean, they are now bigger than AWS on cloud. They are the number 1 cybersecurity company. I mean, they do $20 billion in revenue in cyber compared to Palo Alto, who is the number 2, which is only $6 billion. And of course, you all know what they are doing on generative AI and their investments in OpenAI. And now they just announced, they haven't announced, but there are rumors that they're going to unveil their new chipset to compete against NVIDIA. So that's what's happening in the big cap world. So now let's look at, zoom in more on what's happening on kind of the set of 100 or so public cloud companies that we have in our cloud index. And they're up around 30% year-over- year, so we're on good path to recovery. If we look at valuations have basically reverting to kind of the 10-year pre-COVID average. So obviously it's a big difference between where we were in 21, which was like very distorted, as you can see on the chart. But now we're getting back to something that is more normal. So overall, I would say, just to conclude this first introduction, it's been very impressive to see how the cloud ecosystem has been, resilient, how things have bounced back, and in the next chapter of this presentation, we'll go more granular in terms of what happened, more specifically in the public and private market. Just before handing the cleater to my partner, Rich, just wanted to say a few words about Accel. As you know, we're a global venture firm. We've been on the ground in Europe for 23 years now. Very active in cloud companies globally with 20 plus IPO, more than 65 unicorn, and invested more than $9 billion. So we're very excited about what the cloud ecosystem has to offer globally and in Europe. And hopefully the next unicorn, the founder of the next unicorn is sitting in this room, and we'll be very happy to speak to you. Up to you, Rich.
Thanks, Philippe. So in the next section, we'll dive deeper in the world of cloud, SaaS, and generative AI by taking a look at the private markets, the public markets, and unicorns. So first, let's take a look at the macroeconomic situation. So the last 12 months have been a very dynamic 12 months. We've seen inflation go from its peak levels in 2022 to much more normative levels in the last 6 months. This has been primarily driven by very aggressive actions driven by central banks across Europe and the US, hiking interest rates to near-time highs. The narrative has also shifted meaningfully in the last 12 months. Back in Q3, Stan Druckenmiller, Larry Summers, and other experts were forecasting a hard economic landing. Today, the picture and outlook looks a lot more nuanced, with many economists and experts forecasting a more softish landing possibility. Now, how have Euroscape companies performed during that period of time? And more specifically, how have the fastest growing companies performed? Well, as you can see here, it's been quite a ride for the last 2 years. So here on the left, we're showcasing the top quartile by growth rate Euroscape companies over the last 2 years. And you'll see that the growth rate has changed quite drastically. Back in early 2021, the growth rate for the fastest growing SaaS companies was close to 70% on a yearly basis. That number has gone to close to 20%, a vast difference over just 2 years. Over that same period of time, the free cash flow margin for these businesses has increased as well, from almost negative 10% in 2021 to close to 5% today. Now, has the decline in growth been made up for by the increase in profitability as companies have been sharpening their pencils and making sure that they're lean? Well, unfortunately not. Here on the left, what we're showing is a snapshot of the Rule of 40 companies back in 2021. There were 35 such companies that when you added the free cash flow margin with the growth rate, you got a number above 40%, 35. Today, that number is closer to 16. So really dividing that number by more than half, as really Rule of 40 companies have become an increasingly rare breed. Now, who are these Rule of 40 companies? Well, if you look at the fastest growing companies in the Euroscape, you'll notice that 3 out of the top 5 are actually cybersecurity companies. Companies like SentinelOne, CrowdStrike, and Zscaler, really demonstrating the robustness and resilience of this category, even in difficult economic times. Now, switching gears and looking at the IPO window, following the COVID crash, we had a period of nearly 18 months where there was not a single cloud and SaaS IPO. This was the largest dry spell since the great financial crisis. However, luckily, last month, we had our first cloud and SaaS IPO of recent times, and that was an e-commerce marketing platform and Accel portfolio company called Klaviyo, which went public. And a lot of companies today, unicorns and private companies alike, are taking a close eye on how Klaviyo and other SaaS unicorns will be performing in public markets as they look to go public in the future. Now, who are these companies waiting in the sidelines, waiting to go public? Well, we believe there are dozens of companies that have reached IPO scale and are really keeping a close eye on Klaviyo and others to make sure that the IPO window really is open in the coming months and quarters. Now, looking at M&A, and the picture looks quite different. 2023 has really been a blockbuster year for strategic M&A, especially in cloud and SaaS. We've had companies like Splunk get acquired by Cisco for nearly $30 billion, and Adenza being acquired by NASDAQ for over $10 billion. So what we've seen is really a very stark rebound from 2022, when only 30 or so billion of market cap was transacted from a strategic M&A standpoint. Now, unfortunately, when you look at the different acquirers from a strategic M&A standpoint, you'll struggle to find many big tech companies, at least in the cloud and SaaS world. And you can see by this chart really how stark this trend has performed. So back in 2017, the top 5 biggest tech companies were acquiring roughly 50 companies a year. Today, that number is under 10. So really a stark difference. And this has been primarily driven by steep regulatory pressure across both Europe and the US, which has increased both the risk and the compliance cost of going through these acquisitions. Now, switching gears and looking at take privates, and we see a very similar picture to strategic M&A. We've seen massive take privates such as Qualtrics for $11 billion by Silver Lake and Accel. We've seen Coupa and New Relic being taken private at valuations over $5 billion. And what's interesting to note is actually the premium for these take privates has demonstrably increased as well to over 50%, which is a meaningful increase from the previous 12 months. Now, taking a fresh look at the venture cloud financing landscape, and we see a very different picture, more similar actually to the public markets. And what we've seen so far here is that really the total capital raised across both Europe and the US has largely converged to pre-COVID levels. There's been actually a 60 to 65% decrease in overall VC funding across both the US and Europe across the board. Now, Israel, which had faced a really steep increase in terms of late-stage financing, has unfortunately seen a relative decline in large funding rounds above $50 million, as the decrease of the overall quantum and number of these deals has gone down by 80%. However, fortunately, when we look at the European ecosystem and the Israeli ecosystem, the share of overall venture financing compared to the US has stayed relatively strong. So actually, the number is closer to 50% versus at pre-COVID levels, that number hovered between 30 and 40%. So really showing the resilience and long-term growth potential of Europe and Israel. Now, looking at unicorns, and we see an also very similar picture as well. So when you look at unicorn creation over the last 12 months, it's broadly speaking traced pre-COVID levels between 8 and 10 unicorns being created every given quarter across the US and Europe. However, what we've seen is that Gen AI is really the big contributor to these new unicorns. In fact, over 12 new unicorns were actually Gen AI unicorns, over 60% over the last 12 months. And who are these Gen AI unicorns? Well, we saw earlier in the presentation Philippe's avatar generated by Synthesia. This is one of the unicorns that we're very excited about as investors, but there's also AI21 Labs in Israel and Stability in the UK, really paving the way for this new generation of Gen AI unicorns. Now, when we were here last year, the broad consensus around unicorns in general was fairly negative. Most pundits and critics were really forecasting that a lot of these unicorns would be dehorned as down rounds would really plague the industry and that we'd face a huge wave of these coming into 2023. However, last Euroscape, we made a prediction that essentially, because these unicorns raised so much venture capital financing, and it really built up a heavy war chest, that by managing their burn and growing into their valuations over time, that we wouldn't see this wave of down rounds actually facing unicorns. So how has this prediction fared? Well, we have 122 unicorns from last year, and only 6 of them actually raised down rounds or were acquired for lower amounts, roughly representing close to 5% of the total. And this compares to over 10% that actually raised close to flat rounds or up rounds during that same period. So largely speaking, this doomsday scenario was avoided, at least for the time being, and we're very optimistic looking forward as well. Now, when we take a look at these up rounds, how has Europe compared versus the US? Well, what we can see here is some of the largest rounds in Europe, such as Wiz and Builder AI, actually are in the similar range and quantum as some of the largest rounds in the US, such as Databricks and Rippling. However, when we look at Gen AI rounds, the picture couldn't be more stark. So if we look at the top 7 rounds in the US, and you add up the total, you get to over $14 billion. And this is largely represented and driven by these large foundational models, companies like OpenAI, Inflection, Anthropic, really driving this increased venture financing activity. If you compare that and juxtapose it to Europe, that number is just shy of $1 billion. So really, an ocean apart in terms of venture financing. So with that in mind, can Europe and Israel really catch up in this global AI race? Well, here at Accel, we think Europe and Israel has a chance. And when it comes down to it, it's really driven by the talent and the depth of the AI talent ecosystem here in Europe. So if we look at overall AI publications and AI citations, actually Europe and the UK actually are very well represented in terms of really quality and quantity of these types of publications. However, if you juxtapose it to the US, where you have a very large and deep ecosystem in the Bay Area, the ecosystem in Europe and Israel looks quite different. You have hubs in London with DeepMind, with Meta in Paris, 8200 and Technion in Israel, and Google in Zurich. So similar to the SaaS and cloud ecosystem, the AI talent landscape is very distributed. So we at Accel are very excited about this next generation of European and Israeli companies across the Gen AI stack, companies like Aleph Alpha and Mistral at the foundational model layer, to infrastructure players like Weaviate and Hugging Face, to applications such as Synthesia and 11 Labs. We're super excited to see how this next chapter will play out for European Gen AI companies.
Thank you, Richard. And now it's time for the big unveil. So the top 100 company of the Accel Euroscape. So you can see the logo here. We have added, of course, a new category for generative AI. It is a bit small, but don't worry. The report is going to be available at accel.com/Euroscape, so you'll be able to dive in. I hope you can see the logo of your own company there. But it's been amazing to see all the innovation that we have seen out of Europe and Israel in the past year. And just to to close this, finish this presentation, as we're running out of time now, just showing you what we think is is going to come next. So we've 6 trends that we think are going to shape the next 12 to 24 months in terms of cloud innovation. I think the first one is the emergence of more specialized model. I think, as Rich mentioned, a lot of the foundational model came from the US, and they got the billion-dollar funding. I think the next phase of AI is going to have smaller model, more specialized, targeting industries such as construction, healthcare, legal. And I think as we move towards the smaller model and more important in terms of the workflow and the application built on top and the vertical expertise, I think we think that Europe had all the ingredients to catch up. The second trend around AI is we think that everyone's going to be able to be an artist or better artist. I think Gen AI is just going to boost the potential of digital media creation. As you can see in this introduction video, it took me 5 minutes to produce this video because I just had to write a minute of text. And then Synthesia does all the magic. And this is just the current version of the avatar. You would have, last year I would have been to present it because the avatar wasn't looking that great. Now it starts to be quite realistic, and I can't wait to see what we'll see in a year from now. And potentially, you won't notice the difference between an avatar and a real camera. I think the third trend that I would like to highlight is how we think AI is really going to unleash more potential in terms of enterprise automation. So you have enterprise automation is all about automating processes, and as you integrate generative AI, you'll be able to automate even more complex processes. And you see companies like UiPath who have been incorporating AI in their automation platform for a long time, and now they're able to even push the boundary further and deliver even more value for their customers. All right, I'll leave it to you to see the other 3 trends as you go through the report. But I would say if there are 3 things that I want you to take away from this presentation is, 1, that the cloud ecosystem globally and in Europe and Israel has been very resilient, and it is really on path to recovery. 2 is that Europe and Israel have maintained their relative strength toward the US, and we have seen that now the 2 ecosystems are behaving very similarly, and Europe being slightly above 50% of what's happening in the US, which is kind of a great milestone. And the third thing is that AI and generative AI is going to unleash, I think for the next decade, just a new level of innovation, and that the entire cloud ecosystem is going to benefit from it. Thank you very much. Appreciate you being here, and you can find the full report at accel.com/Euroscape. Thank you.
Thanks.